Welcome back to Rochester Living with Mark Siwiec and Corey James Moran, brought to you by Elysian Homes by Mark Siwiec and Associates. This is episode 206. Mark, welcome back.
Merci.
Where's your beret?
Yeah, it's at home with my clove cigarettes. Yeah.
Why are you not dressed like a
my
mime? Where's your striped
baguette.
shirt?
Yeah.
How was the trip?
It was. I mean, I've talked about it. We've had all these like exotic and really interesting experiences over the course of the past 28 years. It was Paris. One of the best trips we've ever taken.
Because you just stayed at the same spot, right? Because you and Duffy are notorious for jumping from location to location. You're hiking places. You're finding airports where you have to get a four-wheel vehicle to get there.
Yeah, absolutely. Really, really like. And so the plan's working out. We knew 28 years ago that we were going to get the hard trips out of the way, and then as we started to grow older, we got an Airbnb in a residential neighborhood in Paris, and instead of like running from a tourist spot to tourist destination, this monument to that, we just meandered. I mean, Duffy would go to a boulangerie. He'd bring back a pastry or two. We'd knock back a cup of coffee. I'd read the paper, and then we'd walk for 3 or 4 hours before we decided, we're kind of hungry. Maybe we should get something to eat. That's how we spent 10 days.
So I think what you're describing is a vacation.
That's exactly what it was. It was a vacation. I came back so rested.
I was gonna say, recharged.
It was awesome. What about you? How are you?
Doing good.
Yeah. Illness of the week. Go for it.
Knock on wood.
Nothing. Okay, great.
We're good right now. So far.
Okay, good.
Fingers
I'm glad to hear
crossed.
it. All right.
Just give a couple days.
All right. Yeah, inevitably. Yeah, inevitably. So
that's fair. 3 now, so the hit rate's higher for the sickness.
Yeah.
Let's bring our guest in really quick.
I was going to say, who do we have with us?
Yeah. Melissa Powers of Genesee Regional Bank, of the Powers team. Thank you for joining us.
Thanks for having me.
Usually the way we go about is we talk a little bit of real estate and then we focus on our guests, but I think you're going to have quite a bit to mention about real estate. So this will be another real estate centric podcast for sure.
Sure.
Yeah, there's a lot going on. So
yeah, for sure. Let's jump in with numbers first. So we always get that out of the way. You actually missed a big jump last week, Mark.
In terms of listings,
and now I'll just talk about it. Monroe County single family active listings is down from 617 last week to 597.
Okay.
Still decent. Six County region also a little bit
decent
down.
by what metric? But go ahead. Yeah.
Of how bad things have been recently.
Yeah. Wow.
The Six County region was 1071 last week.
Wow.
We're now at 1062, so just a little bit of a drop there.
Okay.
Under contract and pending, those numbers are down as well. 1294 last week, down to 1249 right now.
Okay.
And then for the Six County region, 1895 last week, down to 1841. So things are just kind of this. I mean, Melissa, what's your assessment of the current market? Are these numbers kind of in line with what you're seeing and kind of the feel?
Yeah, I would say it's absolutely in line. I think you saw buyers kind of go to the sidelines in July for sure. I mean, we had our phones just stopped ringing on the weekends altogether, and I think people noticed the listings were dropping too, so they were like, I'm on vacation anyway. I'm not gonna bother tapping into the market. So it was a sleepy month in July, but I think people are kind of waiting until those listings pick up to actually jump back in.
Well, and I think you and I talked a little bit about this last night. I got off the plane from Paris, and you hosted a happy hour.
It was a welcome back party for Mark.
Was not going to miss the happy hour. I literally got off the plane, took the Uber to the happy hour. But we talked a little bit about this last night, and I know it's a little off topic, but I think it's worth mentioning now. I continue to wonder whether or not what we experienced in July is a revision to or reverting back to the way that real estate was conducted. There was a cadence that occurred throughout the calendar year in which from the third week of January until the 10th of July, you were busy, you ran. And then from the 10th to the 15th of July until Labor Day, you just sort of kicked back. You roasted another weenie on the grill. You had another poolside cocktail, and then Labor Day, you always had a great September, great October. I'm wondering if that's what's playing out here. So we'll
hopefully.
Well,
Yes.
hopefully. Yeah, we'll find out soon enough, won't we?
Absolutely.
Yeah.
Well, let's talk about rates because I think this is starting to get in line with following that exact pattern because they're going down. Last week it was at 6.75. We're at 6.57 right now.
Yeah.
It's a nice little number switch.
Yep. Yeah.
Absolutely. Yeah.
And then biggest reason for that, I guess there's a couple, but the jobs report that came out.
Are we going to dive right in?
Let's dive right in. So non-farm payroll rose by just 73,000 jobs in July, which was well below expectations, which is why we're seeing the numbers go down the way they are again.
I think
partly,
I think that's partly why we're seeing it. I think more importantly, do you mind if I just
the revision?
go for it?
So that was the other piece of it, is that there was revisions. I mean, pretty major revisions. May was revised from 144,000 to just 19,000, and then June was revised to 14,000 as well. So together, that's wiping out 258,000
Yep.
job reports, which is a big number.
That's huge.
It's shocking. I mean, it's shocking that we lost, that the revision was so enormous, so large. And so that's the big reason why it is that interest rates are dropping. And my gut tells me, we talked to Corey about this a few months ago, or a few weeks ago, that first revision to the job numbers, the first significant drop, at least from my perspective, that's just the start of what is probably going to be a bit of malaise in the U.S. economy. The U.S. economy for the past few years has just been on a tear. Unemployment numbers have remained low. Inflation continues to go down. Stock market, exploding. All of these great things. But I do think that we're on the cusp now of a little bit of a slowdown.
Which, at least for us in the real estate sector, kind of welcomed.
Sure.
Yeah.
At least to a degree. I mean, when you talk about the slowing of the increase in jobs, it's the slowest 3-month pace since the 2010s outside of COVID-related losses.
Right.
So that's, over a decade. This is the slowest increase that we've seen.
Mm-hmm. Yeah. And do you want to weigh in here? I mean, what are your thoughts? Do you think we're going to talk either about interest rates, talk about the economy? Where do you want to head?
I mean, I think a lot of what happened with, the jobs report was really interesting because I think the market reaction to it was extreme. You saw rates come down a bit, but I think it's almost disproportionate to what you would expect the rates to have come down since that jobs report, because that was a doozy, right?
Right.
But I think there's a couple offsetting factors putting upward pressure on rates, kind of counterbalancing this, because tariffs in general. So the tariffs are just generally putting upward pressure on rates, and then the fact that there's potential manipulation of some numbers and whatnot that's happening, and people they're actually taking action and firing people in certain seats. The data comes into question a bit, and I think that
the data comes into question this past week or moving forward?
This past weekend, moving forward, just in general, like how reliable are these reports?
Well,
right?
we've had those discussions on the podcast before, because we've seen pretty big revisions. Not, I don't think maybe to this level, but in the past as well.
Yeah, and the big question is, how much is the government influencing those numbers as they come out and as they're released, and that influence potentially on interest rates, I think it will cause an interesting attitude in the world as far as like what's really happening in the U.S. like government space, and how much faith can we put into the numbers, basically. So I think overall it might cause the world to lose a little faith in the U.S. economy, and therefore sell some treasuries. Rates go up.
I could not agree more, and I'll be very direct. I mean, you opened it up, but this is very, very, very dangerous. I mean, yelling at Jerome Powell. That's one thing, in all capital letters on Truth Social, and I'm going to fire him, all that nonsense. All right. So this is just the president just letting off steam. For him to actually fire the head of the Bureau of Labor Statistics is, to your point, incredibly dangerous. I mean, there are just some things that are sacrosanct. You can't get rid of Jerome Powell. We talked about that a moment ago.
Right.
If you did, then markets worldwide would plunge. You can't. There needs to be a sanctity to the numbers. When Argentina did this back in the early 70s, all of a sudden the world stopped paying attention to any economic numbers that were coming out of Argentina, out of the government, because people had lost faith. And so what happened then? In order for Argentina to borrow money, they were borrowing at a higher rate because world economics and world financial markets had decided, these are numbers that we can't. And we're very quickly approaching, and maybe we already have, because again, to your point, what faith do we have now moving forward that anybody is willing to give bad news for fear of losing their job?
Exactly.
It is. It's terrifying. So, anybody want to weigh in?
I mean, the other thing I think about the jobs report, kind of unrelated to that point, but of the impact that it's had thus far on rates. Because I would argue that so far this year, the jobs reports have kind of just been there, right? Like the past several years, there was a big impact. If we had a big report, it would go one way or the other.
Yeah.
We've kind of just been in this zone where it's going up and down and not making a real big difference. I would say this is the first time this year where it's had a massive impact.
Right.
Would you agree with that?
Yes, only because I think the numbers are truly significant.
Yeah.
I mean, up until this jobs report, one could make the argument that we were continuing to steadily grow, not at the pace that we were last year, but we continually steadily growing the number of people who are employed in the United States. All of a sudden, you're looking and you're like, oh, holy crap! Like this is an economy, and we've always known that it was probably going to be the jobs number that was going to be the trigger that was going to cause the rates to drop, the 10-year Treasury, et cetera, et cetera. And sure enough, but I do find it rather ironic that everything was perfectly fine. Everything emanating out of the Bureau of Labor Statistics was perfectly fine until one bad report, and then all of a sudden, everything that has come before is suddenly now being called into question. Yeah. So I'm very, very concerned, and frankly, I'm a little surprised that the stock market took the firing in stride in the way that it did. Yes, it fell on Friday. It fell more or less as a result of the numbers themselves, not as a result of the political axing. I really kind of thought that on Monday, 2 days ago, that we were going to see further the market declining even further. Market recovered, so I'm a little surprised by that. Now, of course, these are stock traders. I'm wondering if over the course of the next few weeks we're going to see bond vigilantes rear their head once again, and suddenly then it's going to be the bond traders that are going to force the president's hand. So
It could. And then the other piece of this, of course, is what does the Fed do? Because this is putting pressure on them
Yes.
to lower the rate. And I think it went from about a 38% chance of a cut in September, jumped up to 80%?
87, yeah, 80%, then 87%.
No, it's higher now.
Yeah, but the FOMC, the Federal Open Markets Committee of the Federal Reserve, I think there's just a slight difference here. Yes, it's almost inevitable that we're going to come down a quarter of a point on the 17th of September. Okay,
Sure.
but that's data driven. That's not somebody who is going to have to lower rates because of fear of retribution on the part of the president.
Sure,
So
correct,
I do think that that's very, very important that we make that very clear distinction. So I don't know. I mean, and I wouldn't be surprised. There are all sorts of things. I mean, one, we mentioned a short while ago the fact that this first job revision, this first really bad set of numbers is probably going to cause, listen, I mean, Doge cuts come October. There are a lot of people who over the course of the past few months said, yes, I am going to be done and I'm going to take an early retirement. A lot of those retirements actually start to take place in October.
Okay.
So we've got a lot more people who are suddenly, we got the issue of immigrants, and we've got inflation that's rising. So I don't know. I mean, we didn't even say. I mean, we should touch on that just real quickly. Inflation has been going down from 9.1% in July of 2022 or was it 23? 9.1% 2022, and it's steadily come down. Suddenly in April, it's at 2.6%.
Yeah, I think so, yeah.
All of a sudden now we find this past week it's starting to go up again. So there's something afoot here, and I'm not suggesting we're going into a recession, but we don't have the strong, solid economy that we've enjoyed for the past few years.
Well, we'll get more numbers next week. CPI is the 12th, I believe.
Yeah. So last week was PCE.
Yep.
Next week is it
The
CPI?
12th, yep.
Okay.
Next week, yeah.
Very good.
So that'll be big to see what
That
happens
is.
with that.
Yes.
So what's your prediction? Where are rates headed?
I just feel pretty strongly that rates they will trickle down from here just based on, the Fed cutting, like the inevitable kind of, pressure on the economy. And I think the Fed's going to be pressured to cut the rates a bit. But I do think long term, like at least like the longer end of the curve that we're talking about with mortgage rates and whatnot, I just believe there's upward pressure on rates. I don't think we're going to go much higher from here, but I don't think we're going to see, on mortgage rates anyway, I don't think we're going to ever get back to 5%, at least in the next,
5 flat or a 5 handle?
I think we see a 5 handle. Okay. Maybe in the next 12 months, I think we see a 5 handle. I mean, we're almost there now. It's 6.5, but I do think they're very sticky, right? So I think that based on everything we talked about, the tariff policy and just overall, corporate earnings are also pretty strong in general. You've got a lot of factors that are supporting the economy. It's struggling, but it's not in the toilet,
Yeah.
So I don't know. I feel like there's just so many factors at play, and the political climate is so interesting. And I think there's just until we kind of settle in, I guess, to this administration and what's happening, which I don't know if there's any settling to be done, but
Thank you. Yeah.
But yeah, I mean, I think that, obviously it was a mistake ever to take mortgage rates to 3%. We're not going to do that again. And I would be comfortable with a mortgage rate of 5.5. I feel like that's a pretty fair place to land, right?
Yeah, that'd be fantastic. I mean, my gut tells me, well, all right, so let me narrow the range.
Sure.
Before the end of the year, December 31st, where do you see rates? And Corey, I'm going to ask you the same in just a second.
I'm going to say mortgage rate.
Yeah.
I think I really feel like 6.75.
6.75.
It's gonna go back up.
Yes, I do. I just have this gut feeling that things are too tumultuous right now, and as much as the Fed's going to cut rates, they're cutting the front end. They're not cutting the long end. So we're talking about mortgage rates. We're talking about the 10-year Treasury. That has everything to do with the world's faith in the U.S. And if people dump Treasuries, rates are going up.
Okay.
So I mean, I don't think they're going to skyrocket. That being said, I just think
Sure.
we're gonna dance in the same range, and we're gonna land kind of a little bit higher than we are right now.
I'm gonna be just slightly more optimistic. Not much, but
That's
just
fine.
slightly.
That's fair.
6.5. I'll take 6.5.
Okay.
All right, so we're going to have to play this back on December 31st.
Yeah,
I
there
like
you go.
it.
And you can both buy me a bottle of champagne.
Well, what's yours?
635.
Oh,
right,
we're
all right.
okay.
And here's what
The most optimistic.
Yeah, I like it.
This Paris trip has changed you.
No, because there's an underlying reason why it is that I think that we're going to be dropping to 6.35%, and that has to do with the fact that we are only going to, over the next few months, start to see the impact and the effect of the imposition of these tariffs.
Sure.
And that's going to cause inflation to go up. And we're going to start to see inflation rise. And as inflation rise, that is going to push down a yield on the 10-year Treasury, and that is then going to cause the 30-year mortgage to drop. So I'm at 6.35%. Because of that, and I just think that inflation is going to continue to go up. I think that we still have problems with inventory. I mean, inventory levels. I mean,
100%.
all these warehouses that have been chock full of all this material that was imported prior to the imposition of tariffs. Those inventories are dropping really, really, really quickly. And so all these stores, especially in time for the holidays, they're going to have to start importing again from countries around the globe, and they're going to have to do so at higher prices. So I don't know. I mean, I'm not particularly optimistic about inflation. I'm not particularly optimistic about employment. And for those two reasons, I really think that we're going to start to see downward pressure on the 10-year Treasury yield. And so. We'll see, but then again, I do see that come next May, that's going to be really interesting when we've got a new chair of the Federal Reserve, and what's going to happen then. And my gut tells but then again, you said a few minutes ago you don't have much faith in terms of like any baseline stability on the part of this administration. What numbers are going to come out of the Bureau of Labor Statistics over the course of the next few months? I mean, are we suddenly going to see an upward revision of 350,000 jobs?
A
next
million
month?
jobs.
Yeah, exactly.
Yeah.
A million jobs created.
Yeah.
500 million jobs created. So
Wow. But before we move on from rates, can you just talk into the camera? Just anyone who's waiting for it to be 3% again, just
Oh, yes.
yeah, just get that out of the way real quick. Yeah.
Rates are not going back to 3. I'm sorry to break it to you,
There we go.
but it's not going to happen.
Ever again. Sorry.
Yeah. At least in our lifetime.
Yeah.
I absolutely agree with that.
I could see the mistake being made again, but at least this is too fresh. This what has happened since 2020 and rates being that low. I mean, we're still feeling the brunt of that, and we will be for a long time. I mean, it's an unprecedented situation.
It really was a gift. It was a moment in time. It's a moment in time that will not be revisited if ever, because I do think that economists in future years are going to look back and realize, oh shit, we can't lower rates to 3% or 3.25% because of rate lock, and then all of a sudden it's going to cause the real estate industry to lock in place and freeze, and we don't want that to happen because it has an adverse impact on inflation, on future home ownership, et cetera, et cetera.
Yep.
So I don't know whether or not we're ever going to see interest rates or mortgage rates of 3.25%. So it's definitely interesting, but we also, what is it? Historically, the average 30-year mortgage rate is 8.5%. I think.
Sure. Yeah.
So we're still. This isn't bad. It's just we got spoiled.
We got very, very spoiled. But I do think buyers are feeling much more comfortable in the sixes now than they were a couple years ago. I mean, at first, the second we got up into the fives, it was terrifying, and then we hit six, and people really panicked. Then we went into the sevens, and people were like, "Oh my God, I'm on the sidelines. I can't can't do anything." But now that we're back in the sixes, people are much more comfortable. Buyers
coming
are much
back down.
more, yeah. But I really think like before, a couple years ago, you would have told me the rate was going to be 7.25% on a 30-year mortgage. I'd been like, oh my God, no one's going to be able to afford anything. But now that people are more comfortable in the sixes now. I think it's like buyers are not going to be shell shocked when you tell them their rate's 6.5%, which is great. It's supportive, and I think people are like, the more stability we have. I mean, also our year-end predictions like 6.3 to 6.7. That's not a big spread. It makes very little difference as far as a buyer's monthly mortgage payment. Those rates are very, very similar. So I don't think that's going to scare too many people.
Yeah.
So I think what scares them is if we all of a sudden spike back through 7, and then all of a sudden
get to 8. Yeah, for sure.
Yes.
And by the way, I think I need to correct myself. I think I said 8.5%. It was the historic 30-year mortgage rate. It may have been 7.5%. One of the two. But either way, rates today are lower than the historic average. So
So there was another story that was in the news about the Rochester real estate market, but I want to kind of tee this up. I want to talk about this year specifically and the most competitive price points, at least from your perspective and the clients that you have, of what you've been noticing. Because for the past several years, that sub 200, people were battling it out. That was where the most competition was. Mm-hmm. What have you seen this year?
Well, can I just jump in?
Yeah.
I don't think there is a sub 200 market any longer.
You're
So
right,
let's just start there.
Yes.
Maybe
Yeah,
listed,
Yeah, I mean, basically, the first-time home buyer market is now the 200 to 300 point,
Yeah, yes,
right? Like
250,
that is absolutely. I mean, and that is still probably the most competitive from a quantity of buyers standpoint. But buyers in that range are the most limited, right? Like those buyers are literally they cannot go over 260. Period. The end. So it's competitive, but it's not as irrationally competitive as the $300,000 to $600,000 market, because what was a house listed for $299 in the height of the spring market, it could go for $600,000.
Right. Yeah.
And that was literally happening, and so that it led to more kind of disparity in pricing. I think in that middle, the $300,000 to $400,000 price point, we definitely have the most buyers on top of each other in the first-time home buyer price point. Basically, people who are shooting for the $200,000 budget, and then they end up at $250 because that's what things cost now. Yeah.
Right. How about the upper levels?
The upper levels, there are fewer buyers. You're not going to see as many offers on the $900,000 house as you would. But people are tripping over themselves, and then you see these ridiculous people are throwing, I'll go $300,000 over asking, and all of a sudden we're at 1.4 on these things, and you're like, whoa, that was really shocking. It started at 900.
It's the honey badger segment of the market. Yeah. Honey badger don't give a shit.
Yes.
I mean,
yes.
I want the house. We need the house.
Yeah, it's $1 million. Great. I'll give you 145.
Yeah.
Great.
Whatever.
Honey badgers don't get in this market.
Just
not
money.
At all.
Yes.
Yeah, exactly.
Yeah.
I mean, the privilege and the money of the, I was going to say top 5%, but it's really top 1%. Mm-hmm. Yeah, it's pretty remarkable.
Yes.
Is that percent growing though? Because the numbers this year in Rochester are very interesting. There's been 86 homes sold for over $1 million this year. 86. That's an increase, at least from a non-waterfront luxury property, increase of 72% year over year.
Wow.
Yeah.
That's a giant increase.
That is wild.
And some of this is going to be attributed to, again, what you just talked about, and you alluded to as well, Mark, about people that are just like, I want the house, I'm going to get the house. So maybe it's one that was on the cusp that maybe isn't really $1 million house, but they made it $1 million house.
Sure.
But still, I mean, how many stories have we heard of what you just talked about, where someone just went 300 or 400 over on
Yeah.
an 850 listing?
Yes.
This is a demographic that does not, it's not beholden to or tied to mortgage rates in any way whatsoever.
Or logic or reason.
Or yes.
What was that?
Or logic or
Oh,
reason.
exactly.
really?
Yeah, yeah. Okay.
Well,
Yeah,
And it's you decide what you want, you decide it's the house, and you're like, what's the difference if it's 1.1 or 1.3 at that point? You want it and
Yeah.
you go for it. And that's,
because you know that if you've overpaid by $200,000, well, who gives a shit? Because your mortgage, your stock portfolio
Yeah.
is going to go up $200,000 over the course of the next 12 months. So who cares?
Sure.
Right.
Yeah.
and also presumably that's kind of a forever purchase, right? A lot of the people I
Yeah.
think in that price point in general are kind of trying to, that's their forever home. They're going to die in the house. That is exactly
Sure,
what they're looking for. And they're willing to do whatever it takes to get there because they're like, you know what? I've done this before. I've had the house I didn't love. And now this is my dream house. This is my forever home. And
I'm just stumbling upon something that I'm just realizing, having done this for far longer than the two of you, because I'm old. There was a point in time when you would walk through these, well, what today would be a $750,000, $800,000 house in Pittsburgh, and you'd walk through and they were sterile. Why? Because people had just spent all of their money, all their disposable income on the house. They couldn't afford any furniture. No,
Yeah.
seriously. And like you'd walk through and like Spartan.
The definition of
yeah.
house poor right there.
yeah,
Yeah,
that is,
yes, and then the furniture they did have, it was like right out of Rent-A-Center. It was really, and this wasn't just occasionally, like this was over and over and over and over again. You're seeing less and less and less of that because I think that people are, most especially since the Great Recession, people are more careful with their money. So there's buying a great house still, but they're realizing that I can't spend 55% of my gross annual income on the roof over my head. I need to ratchet that back down to 35% or something. So I still got an opportunity to put food on the table, to put furniture, in the living room, et cetera, et cetera.
Whereas now, I mean, the buyers who are kind of being forced to go and stretch their budget to the actual limit, that I'm seeing that in the $300,000
Yes.
to $400,000 range, and people are, we get them qualified to a certain number. Initially, they think that's plenty, that's more than enough, and then they go out house hunting and they ask us for another $100,000 in their approval. And that's a big jump,
Yes.
from someone who comes in saying, hey, 350 is a fine max. All of a sudden, it's 500, and that has happened a lot with
Yeah.
a lot of our buyers. They just can't compete. They're losing out, and they're realizing what these houses are ultimately selling for, and and then we look at you kind of like their debt to income ratio because that's what we qualify people on, and it's definitely higher than we've seen.
40%,
We
I
are
would imagine?
pushing it.
42%?
Yeah, like technically you can go up to 50% gross monthly, 50% of your gross monthly income. And a lot of buyers, it would actually be an interesting thing to pull. I should have thought to do this beforehand, but kind of like what is the ultimate debt to income ratio of the deals we're closing right now versus what was it a couple years ago? Because, and even since rates went up a couple years ago, because this is more of an impact of prices. So it's like, the prices are really pushing people's comfort zones and to the point where they're like, wow, I really am breaking the bank to get into this. I guess I'm gonna have to swallow this mortgage payment for now. And,
Yeah.
we're talking about, okay, well, put your money in this 4% interest checking account because it'll offset your kind of higher than you expected mortgage payment. And that's
But it's the pressure. I mean, it's been this many years where it's been this difficult,
Yep.
and people are having children and they're and doing all the things.
Oh my
It's
gosh,
going to only
yes.
get worse.
yes, exactly.
Well, and you saw the blog, first-time homebuyers. Back in 1991, average age of a homebuyer was 28. And today, average age is 38.
Sure.
Yeah. But people have to get in. And that's the most important thing is, yes, in this segment of the market, you have to get in and you have to overpay and you have to spend 42%, 45% of your gross annual income in order to start to build equity, in order to buy a house and build equity. And so you're probably going to have to live with the plank over a couple of milk crates, as a living room table for a short while. But that to me makes sense. I'm not sure if it makes sense as as a 52-year-old to be living with no furniture. But again, we're not really seeing that right now. So
no.
I'm curious, how are the buyers reacting to the prices? Is the sticker shock that we've seen the last several years still there, or are they kind of coming to terms with this is what it is?
Well, I think that it's a little bit of both. I think sometimes people are still kind of blown out of the water, but I think because rents have increased so much, anyone coming out of a rental, they're like, oh my God, my rent used to be $1,000 a month. Now it's $1,800. it's less of a jump when then you end up at $2,500 a month.
The landlord giving thumbs up.
Yes, yeah, a little higher. Well, and that's the thing. People, but I think the old school method or mentality of like, oh, my rent payment is $2,500 a month. I should just buy and I'll have a lower payment. It's like, well, no. If you buy, you're not going to have a lower payment than your rent, but at least you're earning equity in something.
Right,
That's the idea.
Yep.
Is it's
and the benefits of being able to write things off in your tax return. Yeah.
Yes, exactly. Yeah.
So.
And then what's the comparison with people who are local versus people coming into the area with that, what they feel about the price of things?
I think, well, people moving into this area still are shocked at how cheap it is.
Still, okay.
Yeah.
That's kind of what I thought the case was going to be.
I mean, it definitely is because, you look like the downstate, which, from New York City, they call it upstate, but Westchester, it's that kind of area, you don't see a house under $1 million. Here, there's still plenty of amazing homes under $1 million. So, I mean, our price point is still low enough where people moving to the area, and then you have the out-of-town buyer who just throws in the crazy offer that throws off the whole market here, But I think the gap is closing though. I mean, it's certainly, we're not as underpriced as we have historically been.
Again, for 70% increase in the past 5 years, we're getting there. That's for sure.
Yeah, exactly.
One of the things is, we talk about first-time home buyers. I think one of the real difficulties for first-time home buyers, especially if they're younger, is the influence of their parents.
Yes.
And what has that experience been like from your perspective? Because I know what it's been like from my perspective.
Yeah. Well, parents, I appreciate parents too, because I have parents myself who they let us do our thing, but when we ask their advice, we take it seriously, right? And my parents they're great about not being over-involved, I will say. But I think when we have a parent who's getting involved, they have great perspective that, hey, mortgage rates were double digits in my lifetime. There you go. I love that perspective. Yeah. I love that reminder.
You're probably you're having these conversations after it is that the overbearing dad has been weeded out of the process. Honestly, because that's what you experience.
Yeah.
But then usually, and again, I haven't worked with buyers in a long, long while, but my experience with working with buyers is that after dad just blows apart one or two, like this is my dream house, I want it, and no, there's a squeaky floorboard, and dad blows it apart. All of a sudden, the kids are like firing dad as as their built-in inspector, and then you're probably only getting those who have actually mom and dad who are being really, really intelligent about the advice that they're providing.
Yes and no. Like we have a total mix. Like sometimes mom and dad are involved out of the gate. We're on the phone with mom and dad.
Wow. Okay.
And actually, it's come into play a lot more because mom and dad are usually involved in the gift money conversation because in the market now, everyone needs the cash guarantee, and with that, you got to put a 20% good faith deposit down. First-time home buyers very rarely have a 20% good faith deposit available. So mom and dad are involved out of the gate because that frees up their ability to do the 20% down. So we very often are having this conversation with parents about, hey, you can gift them the money for the good faith deposit and they can give it back to you because, before closing, you can just do 5% down on the overall mortgage if you want to.
Right.
So it's really, parents are involved from the beginning, and we have to have the conversation of, hey, this is what we're doing to protect your buyer or your child. I should say child, adult
Sure,
child.
yeah.
But yeah, so parents have to, we're asking the parents to contribute financially, whether it's for the real down payment or just for the good faith deposit, and they've got to be on board from the beginning, really. And it's
there you go.
It's really critical for a lot of people to play ball right now.
Do you have a number on that? Like just ballpark, just percent that have help from mom and dad or their rich uncle or whoever?
It comes up, I would say at least 50% of the time.
Wow. Okay.
Yeah.
That doesn't surprise you, does it?
50 is a big number.
I would have thought like 75% of the time. Yeah.
Yeah. Well, a lot of people are like, a lot of people also have like retirement accounts and stuff they can pull from, or they're second time home buyers. They already have a house. They can pull the equity from, because we have the, a HELOC ability at GRB. So it's like if a buyer doesn't have the cash but wants to pull equity, they don't have to ask mom and dad. They can take a HELOC on their current house. So we have less involvement from mom and dad usually, because with people coming out of a house, if they have a house to sell, we usually can bypass the gift money thing.
Sure.
But yeah, no, I would say they're involved, but a healthy level of involvement, where they look at this and some of the time they're like, this is insane. And you're like, yes, this is insane. Thank you for that perspective. I agree with you.
Right. But this is what we have to do. Yeah.
But let me help you navigate the market, because that's what it's all about. It's
Right.
like, yes, I agree this is crazy, but if you would like to successfully buy a house, we are the professionals who are going to help walk you through it. And yes, it does help to have a bank account with some funds to lend.
And let me just riff on that for a second, because I got to do the shameless promotion. You do help people, and you do an awesome job of helping. Like, honestly,
Thank you.
I mean, Saturday, Sunday, 7 in the morning, 9 at night, and how old's the baby at this point?
3 months. As
3
of
months.
Tuesday, yeah.
Yeah, like literally, I think like 5 days after you gave birth, you were back at it. And that's what it takes in this market. And your buyers are reliant on that. Agents, we as agents are reliant on that. I mean, you and Steph do such a great job. Genesee Regional Bank does such a great job. We're just, you're just valued partners. We're so
Thank you.
grateful. And you host a great social hour, great happy hour. So thank
We
you.
do appreciate a good happy hour. But
So thanks for that.
well, thank you for that.
Yeah,
I
yeah.
appreciate it. But
Absolutely,
yeah.
you guys are just tops.
Ultimately, we want to protect buyers right now. I mean, that's our job. That's who we interface with, and we're trying to just make sure they're as comfortable as they could be given the circumstances. And they tell us their goal is to buy a house, so our job is to guide them in the most responsible way we can think of, really.
And you do such a great job of explaining something that is so complicated. And making it make sense to a lot of people.
Yes,
especially with all the spreadsheets. I've seen the spreadsheets.
Oh,
Spreadsheets are phenomenal.
I love a good spreadsheet.
Wow, you and Ed have that, our COO, you've got that
yes.
in common.
Yeah.
Ed loves a good spreadsheet. Oh my
yes.
God.
Big Excel guy, for sure.
Yeah.
So aside from crazy rising prices and insane competition, how have you seen your role evolve since you've been in it?
Well, I mean, kind of just what we were just talking about. I mean, it's very much an advisory role. It's an all-encompassing advisory role, more than just like, oh, here's your mortgage rate and how much you're going to put down. We're grasping at straws in cases. We're like, okay, what do we have to work with? So it's our role is more of a counselor than anything. And then we have the
Psychiatrist thrown in there as well.
Yes. Oh yeah, absolutely. Yeah, you have to kind of dip in all aspects, because it's you need to free up capital for people, so we've got tools to do that. But then you have to talk about someone's overall financial situation too. So you're talking about like consolidating debt in some cases, like, oh, let's look at hey, this mortgage payment's way more than you thought you could do initially. Let's talk about how you can make it more palatable for yourself, and can you actually pull this off? Is this financially responsible also? So I mean, I take it to a level I probably shouldn't. I will.
No, you should. Yeah.
Well,
and that's why you're successful.
Because I care. I
Yes.
genuinely, I'm like, if I feel like someone is stretching too much,
Yep.
I will let them know, like, hey, I do think we should adjust your budget a little bit based on, and you can tell from a buyer's behavior too. Like once they get over that comfort zone, all of a sudden they start to think irrationally about their offers and stuff. And you have to sometimes just dial it way back and think about, okay, how are you really feeling? Like what is the big picture here? What do you need? So yeah, I mean, our role has evolved to like full on counseling, I would say.
I mean, both financial and emotional.
Yes,
I mean,
financial and emotional. Yeah, absolutely.
It is
Yep.
the exigencies that are placed on you, the requirements. I mean, it really has become more and more complicated, sophisticated, and holistic.
Sure. Yeah.
So, yeah.
Favorite part of the job?
Wait. By the way, can you tell that one of us actually prepared for this interview and the other is just like jet lagged?
I love it.
So I'm just gonna like sit here like
Who knows what Mark's
smoking
gonna
another
say.
clove cigarette. So go ahead, Corey.
Favorite part of the job?
Oh my gosh, I love teaching. I actually wanted to be a teacher when I was like,
Okay,
a
interesting.
kid going in. I didn't know what I was going to do with my life, but I really like the education part of it and kind of seeing that light bulb go on for people because we do everything over the phone, right? So I very rarely take an in-person pre-qualification meeting, but I love when you're first on the phone with somebody and you're talking to them about, okay, setting expectations. You thought the mortgage payment was going to be $1,500. It's actually $3,000 a month, and here's why. And
Yep.
But I love that feeling of like when you're talking to someone and you can kind of hear the hesitation or just the silence, and you're like, you're not really getting me. You think of a different way to say it, and you can feel that light bulb go off once in a while, like when you like really hit home with someone and they're like, I get it. I'm on your page. So I love that. I love like being able to explain it to somebody in a way that they'll actually understand. And then they come back and they're like, wow, thank you.
So they have an actual clear picture
Yes.
of what to do moving forward.
Yeah. And it's fun. I like that part of it. And develop my own systems and stuff to make it even clearer for people. Like after we talk, I give them the visual spreadsheet.
yep.
So it's numbers are scary for a lot of people. Math is something that like doesn't come naturally to most people. It's actually probably the one thing that people just kind of panic about. Most
Especially when it's
often.
money.
Yes, yeah, and it's their money. But yeah, I like the teaching aspect.
I guess kind of piggybacking off that as well. If someone's looking to buy in the next, maybe few years, it's kind of more of a long-term plan. When should they reach out?
Right now. Absolutely right now. Because it's kind of a fun exercise to just kind of see where you're at today. And it's never too early. Like sometimes people wait and then we talk to them and by the time we run their credit, we're like, oh, I wish we had talked 6 months ago because your score is only like a 690. Like if we had just done these really easy things, like your score would be a 760 in 3 months, So it's never too early to prepare, and it's really, and sometimes people end up saying, oh, actually I do want to buy now, but it's not about that as much as it's about just preparation. Like, it makes perfect sense to talk to a lender now about just the basics of what you need and kind of like lay out a game plan. The credit optimization thing, I'm a little bit obsessed with because I'm just, it's
It's a important piece of it.
You run someone's credit, and there's a pretty big difference in your interest rate if you have like a 690 versus a 740. So it makes a big difference, and sometimes it's just a matter of like, oh, I didn't realize I shouldn't have had that kind of a balance on my credit card, or
just having the time to get that stuff settled, and
Exactly.
figured out is so
Yeah.
important. I mean, how many times do we get into a situation where someone comes in last minute and they're panicked and they just got to get something?
Yes.
It's not a fun situation to be in for anyone involved.
The more prepared you are, the better position you're in.
And as you said, like sometimes these are really, really simple solutions.
Yeah, but doesn't cost you any money. Simple solution: increase your limit on your credit card. Do that.
Easy.
Do that now. In 6 months, your score, like you don't have to spend less. Even you can spend what you spend, but just don't. Your limit's only $5,000. Why is your limit only $5,000?
Mom and dad buy the car from you. You still own the car, but they're responsible for the payments, and you're paying mom and dad
Sure.
on the side. And
Yep.
it's not, the car payment is no longer on your credit report. Just easy things.
Or in that, so if somebody's making your car payment for you for 12 months, by the time you go to buy the house, you can omit that debt from someone's credit, even if it's still on their credit
There you
report.
go.
You can, if someone, if you have to, the person who's paying for it has to provide 12 months of bank statements, but if you can prove someone else has been paying
Yeah.
for it, you can omit that debt. So there's a lot of stuff like that where it's like, you wouldn't know. It's like, oh, I wish we had talked a year ago.
What's your favorite one? Your favorite trick?
Favorite trick? Ooh, oh my gosh. I don't know. Paying down credit card balances is the juiciest way
Okay.
to
So the
increase
quickest?
your, yes, it's
Okay.
the quickest and juiciest way to increase your score immediately. If you have maxed out credit cards. If you don't have maxed out credit cards, that does not work. But
And what is the difference in terms of the interest rate that you're being able to secure as a result of doing something like this? Quarter of a point, half a point?
sometimes up to a half a point, depending on like what percent you're putting down. If you're putting like 5 to 20% down, it has a bigger impact. Yeah, so like maybe up to half a point potentially, depending on like a lot of different factors. But yeah, it's potentially pretty big, and it has a big impact on your PMI rate as well. So if you are doing 5-10% down, not only are you getting like a higher interest rate because your credit's a 690, your PMI rate, which is the mortgage insurance you pay if you do less than 20% down, that rate is very highly tied to your credit score.
Oh, interesting.
So
Okay.
the PMI is, higher when you put less down, but it's also even higher than it would be if your score is lower. So yeah,
It adds up. It
does,
really
yeah,
does.
that's
So
us.
call now, like we said.
Call now.
Just
Yeah.
now.
Yeah.
It's good.
Well, and that's the thing is like
Yeah.
it takes nothing to just have a conversation, right?
Sure.
And a lot of people are afraid to talk to a lender because they think their credit's going to be pulled over the phone immediately or something, like as if we have some way to extract
right.
your
Yeah,
credit report. It's like
Yeah.
just talk to us. We're people, like we want to talk to you. We want to hear from you.
So he said a moment ago, call now. So I'm assuming you probably actually have a cell phone, don't you?
Oh yeah, it turns out I
Yeah.
do.
What's that number?
My number? Should I
Yeah.
give it on? Oh
Yeah,
it's
Sure. Come on. There was a
absolute-
softball.
oh
There was
my
like
gosh.
there was a what's the number?
I didn't think this was a live. Just kidding. 585-771-0138.
There we go.
Awesome. Anything else, Mark?
Yeah.
Wanna jump to Little
No,
Rochester?
I'm just gonna like load up another like I'm gonna eat some more of this baguette, have some more brie, and yeah.
We're going to talk about cafes, a thing you know a lot about now.
Oh, there we go. There we go. So I sent this to you this morning, and I was so excited.
Yeah.
But then I read the article. It's not nearly as exciting as I thought.
I mean, it's
Well,
adjacent
actually-
to exciting.
Well, It was even more exciting, let's say 15 years ago when you lived next door, wasn't it?
It's very true.
Yeah,
I did.
very
I
true.
did,
Much
I did
more
live
exciting neighborhood.
right near there.
Yeah.
So we talked about when Spot Coffee closed down in the East End. Very, very sad.
Yeah.
Very sad.
This is not exactly a replacement for it, but there is another coffee shop going into the same, I guess technically same building, right?
Yeah, right.
It's just like a little bit down. It's where the bubble tea place was.
Oh,
Yeah.
sure. Yeah.
So Eden Coffee and Co. will be opening later this month.
Shocking that the bubble tea restaurant didn't.
There was
really-
like 19 bubble tea places.
Yes, there was an unusual amount of
There's
bubble
too
tea.
many
places.
bubble
I don't know why.
Shocking that it didn't do well on East Avenue here in downtown Rochester.
think
But
so.
go ahead, yeah.
So this one's going to be in the historic Hallman Chevrolet building on East Ave. Again,
Bravo.
that's, Spot was just kind of down there a little bit. Did we know what's going on with Spot, by the way? The old, like a space for it?
No
Just
idea.
vacant, just sad.
It's vacant, and until Malik does something about the deteriorating state of downtown Rochester, it's probably going to remain vacant.
Yeah.
We almost made it a full podcast.
Yeah,
Oh, so
no,
close.
sorry.
Oh,
Almost. No, today was not the day.
But that'll fill in, that'll fill the void for a little bit, the new coffee shop.
Wait, where did Melissa go?
Sinking in her chair.
Oh dear.
And the other thing I just wanted to mention really quickly, Ledestri Foods.
Oh, this is a great, incredible story.
So they're doing a $30 million super plant investment, which is pretty amazing. So they're transforming its 1.5 million square foot campus into what's being dubbed as a super plant. They're upgrading pretty much everything when it comes to it. And ultimately, the good news for us is it's going to lead to more jobs in our area.
I mean, I had no idea until I read this article that they employ 900 people locally.
It's a big number.
That's
It's a huge
incredible.
employer.
Yeah, and they're good people. They're very good people. So, what else you got for us?
Anything pop culture?
I've been out of. I actually started reading a book on Marie Antoinette. Awesome, like seriously, like really, really, really great.
You were inspired?
Yeah, and Hard Knocks. I watched the first episode of Hard Knocks last night.
Gotta watch that still.
Yep. Yeah, I need to watch it. Yeah.
Yeah, I give it a 5 out of 10. And I love the Bills. Like I'm sure that the second, the third, the fourth episode, but meh, it was
You've
just.
never watched it before, though, or have you? Watched Hard Knocks in general?
No, I've not watched Hard Knocks before. So
Okay.
I mean, it was a nice teaser. It was like honestly, it sort of prepares you for the upcoming season.
Yeah,
so
first
yeah.
one's like, it's like the beginning of a class. You get the
like the setup.
itinerary,
Yeah.
it takes a little
It's the
time.
Fellowship of the Ring. It's
Yes.
a little slow.
Plus, the drama hasn't happened yet, so
Yes.
we'll see. We were at Bill's camp today, so I didn't see any fights. You see any fights?
No,
Yeah,
nothing
no.
nothing
So we'll
spicy. Yeah.
But what about you? What are you watching? What are you reading? What are you listening to? You were just looking at spreadsheets. That's okay if you want to admit that. That's
No,
totally fine.
I am in a haze of I have a 3-month-old baby
Yeah,
at home
true.
and 2 toddlers, and I am
A lot of
I don't
Bluey?
have time to do anything. Mark, my husband, has been watching this show. Henry Winkler hosts it, and it's like
The Fonz, yeah.
it's like the Fonz, and it's like disasters over history. So it's like
Oh,
things
interesting.
that we'll never see again, like candy cigarettes or like
Okay.
they had a
Do you remember those
They
candy
used to
cigarettes?
sell-
I do, yeah.
oh yeah,
And
absolutely.
like the
Yes.
tip would be like a little like
Yeah.
orangey yellow kind of thing, as if
Yes.
you were like really like smoking. Yeah,
Oh yeah,
yeah.
absolutely. Yes, and there's like really horrific things like and also like they had one episode on heroin. Apparently, that was a product that was actually sold.
Oh my God.
So there's a whole this show is amazing. I actually don't even know what it's called because Mark's just have it on TV and I'm doing dishes and
Sure.
cleaning pump parts and all the
What?
fun stuff
Heroin?
that you do. Yes, yeah, it was first sold over the counter.
Huh.
Yes.
Interesting.
But anyway, yes, it's an interesting show. It's just like a lot of things about like disasters over our lifetime. This one baby product, it was like this miracle baby soothing product that they were giving. I think it was like in the 1920s, and they were like, "Oh, this works. This is amazing." The maker of the product made millions and millions of dollars, and then they realized that the actual active ingredient in the whole thing that was working to soothe these infants was morphine.
Oh, well, that'll do
Well,
it.
there you go.
Yeah.
Effective.
So things like that. So it's like that's what
That's
I'm witnessing at home. I don't know. I just watch whatever's on the TV. That
Is that History Channel or is that?
I think it must be History Channel. Yeah.
Interesting.
My kids right now are into K-pop Demon Hunters. It is the best kids movie going right now.
Okay, I have to try that one. All right.
It's a Netflix movie. It's amazing. It's got a great soundtrack, good pop music.
And so you were talking. So who stars? Is it like the members of Blackpink or who stars in it?
Who I have no idea. It's
okay.
no one I've ever heard of. It's just got a great soundtrack as far as pop music, and it's K-pop, right? So it's just like really catchy. But the whole
bubblegum, yeah.
the whole premise is it's like the female band are demon hunters, and the demons create a boy band.
That's fine.
And it's amazing. It's just great.
Okay, I'm deep in Peppa Pig right now.
Oh, solid,
as well.
solid.
So much so that my 6-year-old Mason is talking in a British accent when
perfect.
he does the Peppa voice. So
Oh, that's amazing.
What are you watching, or listening to, or reading? I mean, you did this morning, of course, the Bills camp.
Yeah.
Was it good? Did you enjoy it?
yeah, it was fun. Yeah, it's always good to see the players out there and
Oh,
just
yeah.
everyone representing.
Yeah.
Just the community aspect of it's always nice. Just walking by people and saying "Go Bills" and they say
Yeah.
it back to you. So it's on Netflix. I think it's the #1 show right now. Courtney's more into it than I am because I'll fall asleep and then she just goes ahead. It's called The Hunting Wives. I don't know if you've seen that one.
Oh,
No.
It's about a couple from Boston that gets like transplanted deep into Texas, and she gets integrated with these, hunting wives. So they literally go like pig hunting in the first episode, and it's interesting. It's a little dark, a little murdery, one of those kind of
Oh,
deals.
okay. All right.
So from what I've seen, the episode and a half, it's interesting.
Sure.
There you go.
Yeah. Anything else?
No, I'm just gonna go.
Take a little nap.
One more appointment, and then I'll be. Yeah, I'm still just a little bit jet lagged.
That's
Perfect.
did pretty well though. You
Well, but
stayed awake
thanks
the
for
entire time.
that's because you carried the show. Thank you. I
Yeah.
really seriously, I
To my best.
appreciate it.
Great
Yeah,
job, Court.
Well,
and we had a
listen,
great guest.
Thank you so much. Appreciate it.
Thank you so much for having me.
Yeah,
It was a
thank you
blast.
so much. We love working with you, and we are really grateful. Yeah.
And thank you for watching and listening. We'll talk to you again next time.